Good morning, everybody. Hey, welcome to Thursday, July 7th. I hope you're doing well. I just want to come to you a little bit before Dave gets on today and just remind you about our free report again on market corrections and what we need to do to kind of protect ourselves from that. And so let me just share that with you right here and get myself out of the way. There you go. All you have to do is text the word market to 863-285-3815 or click the link above this post. It'll take you right to that report. So again, thank you for being here. Hey, if you like what we're doing, please like our page, Statler Financial Services, and then also share this post with your friends. Hey, Dave will be with us in just a moment.
.7 Light FM. Hi there. 8:38 now. It's 22 before 9. Let's check in and see what the Wall Street mavens did to our money yesterday. Today's going to be data dump day out of the federal government. We actually have some data to mess with, but Chairman Powell testifying in front of Congress yesterday and today probably still going to drive us. Let's see which way we're driving. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you?
I'm doing well, Dave. Hope you are too.
Can't complain in the least. Boy, it was not a bad day yesterday. Dow up 104. Wait a minute. I got futures here in front of me. I'm using a different set of numbers. Dow was up 76 yesterday. NASDAQ up 60. S&P was up 13. Let's see. That looks like we're about 3 points short of a record on the Standard & Poor's yesterday. They must have liked what Powell had to say in front of Congress, huh?
I think so, and it seems to be carrying over today too. We've got some green ink pretty much across the board.
You know, my biggest concern was that somebody in the House of Representatives was going to try to goad Powell into saying something stupid. They evidently didn't. He stayed on script, said we're going to be cautious, but we're going to be capable and willing and able to respond when we see things slowing down, and that's what we're seeing now. He kind of did what he needed to do and didn't get goaded into making a mistake.
Well, it definitely seems to be the case. I mean, I know that they definitely liked what they heard yesterday in the marketplace, and like I said, it continues to be evident this morning that that they're liking what they heard. I mean, the S&P up over 3,000. Who'd ever thought we'd be over 3,000 the S&P 500?
Yeah, it's almost amazing, especially given the fact that we are engaged in a little bit of a business slowdown that pretty much has been backed up by data for enough months to be able to say we got a trend going on. The interest rate thing kind of kicks in a little bit when we look at the consumer inflation rate issued this morning. The actual CPI was up 0.1% last month, which is no great shakes. But I'm looking at two numbers. The core CPI, which gets driven a whole lot by things that we really don't care half as much about the regular do, that actually showed an increase over 2%. The overall CPI, that includes stuff like gas and food, that actually is down under 2%. I wonder which one they're watching when they look at interest rates on the Federal Reserve.
Well, and that's a good point, Dave. I'm not sure which one they're really looking at, but let's face it, if we look at inflation as a whole right now, it's a lot lower than what it was this time last year. I mean, last year we were at about 3%, maybe a little over 3%. Right now we're bumping around 2%. So that's not, I mean, the Fed wants it over 2%, but that's not, I think the Fed's really not in a happy place given what's happening with inflation. They really want it to be higher than what we've seen lately.
Yeah, well, at the very least, comparing last year to this year, it kind of proves that interest rate increases do what they're supposed to do. They slow down inflation. Unfortunately, we put the brakes on a little bit more than we needed to now, and we're looking at least one of the CPI gauges being under that 2% number the Fed wants. So it kind of puts an interesting question on them. One of the measures is a little higher than they got in mind. One is a little lower than they got in mind. So we talk about decreasing interest rates. Which way do we want to go? We'll find out. Jobless claims, that was a pleasant surprise, wasn't it?
Yeah, it was. They came in at 209,000. They were expecting 223,000. So that was definitely a pleasant surprise on that point. So you add that to inflation coming down, and we see some big numbers coming out of the market this morning.
I get that feeling. Wages also up by 0.2% last month, which doesn't make the 3% number folks say they want, but at the very least continues to show growth. It's one of those weird business slowdowns where we're pretty much at maximum employment. Everything's going in the right direction, except business reports are not as favorable as we wanted to see. Speaking of which, beginning earnings season, only one report of great consequence, but it's a big airline, right?
It is. Delta came out, and Delta beat, pretty well. They had actually record revenues, $12.5 billion. They came in at earnings per share at $2.35. They were expected to come in only at $2.28. And I think probably one of the things that's helping Delta right now is they do not have any of the Boeing 737 Maxes in their fleet. They never have. That's not one of the things that they've ever used. And so they're not having to cancel flights like a lot of the other ones are.
I was reacting to that because we'd had the note yesterday that American Airlines had put out word that they were going to lose a running ton of revenue off of all the 737 cancellations. When you told me you had Delta, I was wondering if we were going to have bad news. They aren't flying the MAX, huh?
No, they don't fly the MAX, and so they're trading up this morning about 2% and looking pretty good.
Not bad. That's what they get for cheaping out and going with Aerobus, right?
I guess so. It's definitely been a help to their top and bottom line.
At the very least, for the moment, it's helping. That's for darn sure.
Yeah.
Setting the table again for the morning. We've got the Dow up, we've got the Nasdaq up, we got the S&P up from yesterday. Powell's going to be back up on the Hill, this time talking to the Senate. You mentioned, and I don't have access to it this morning, Phillip, that federal bond yields are going in weird directions again, aren't they?
Well, they are. I mean, once when the CPI and stuff started coming out, the actual 10-year started going up this morning. It's hanging right around. Let's see where it is now. It's up about 0.1%. Is it 2.07%? It got as high as 2.08 this morning. But still, that's showing a rise up. I mean, it's still nowhere near where we were this time last year.
By any measure, but a rise tends to indicate a return in faith to equities, which kind of tells us where some of the smart money is going anyway. 45 minutes before we open this, Phillip, which way are we looking this morning? So we kind of alluded to it. How fast are we going in a positive direction?
So we are going positive. I will tell you that we're giving some of it back, though. The Dow was up over 100 points. It's down now. It's up only 88 points right now. The S&P 500 is up about $5. The Nasdaq's up 11 3/4. We've still got gold up by another $4 an ounce. Silver's basically even right now, and crude oil. We are back over 60, Dave. We're at $60.52 a barrel.
I saw that on my cell phone this morning and said, why on earth don't I need to fill up yet today? Because the price is going to go up at the pump, isn't it?
Well, yeah, it is. And I think that could be, I read a little bit yesterday about how on the Gulf Coast they're having to shut down refineries or wells, oil wells, getting ready for this tropical storm and possible hurricane.
I was going to say that always results in a short-term bump up in the price of oil as they have to shut things down for a security purpose as the weather approaches. Overseas markets this morning, by and large, Asian markets were evenly up across the board. European markets are off by a tinge. No great amount of movement, but it is red ink this morning halfway through their trading day. Phillip, somebody need advice to make sure that retirement remains a secure prospect for me and my family. How do I find you on the phone?
Dave, I think it's important people get a copy of our free report on market corrections. And all they have to do is text the word market to 863-285-3815 to get their free report. Or if they see this post on Facebook, they can just click the link right there and take you right to it. They can check with us, and if you're needing some coaching through retirement, out of retirement, give us a call, 382-0037, and set up your financial x-ray analysis of your current portfolio. And join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings.
All righty. That's on our sister station, News Talk 730. Streaming there at newstalk730am.com. And these reports also streamed every morning at 1057lightfm.com. Proud to be on the internet. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, buddy. Thanks.
Thank you much, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop.
Hey, again, I want to thank you for joining us today. Again, if you like what we're doing, please share this video post with your friends and family on Facebook. I look forward to speaking to you again tomorrow. Have a great day.